out today, but obviously the war in Ukraine continues to undermine markets. Today, we've had President Biden in Europe meeting. It's like a tripartite series of meetings today, principally kicked off by the NATO meeting earlier, with Ukraine asking for more armaments, basically aeroplanes, missiles, and support for defending their coast. Europe seems to be coming up with that. NATO seems to be coming up with that. The UK have promised 6,000 additional weapons, fortunately or unfortunately. Depends how you obviously view this horrible situation. But as far as the market's concerned, markets continue to move on as ever. And we've had some key PMI data, sort of quite strong across the board. There's some mixed data between these services and the manufacturing data out of the UK and Euro, and the US is still to come later on today. It's the flash. It's the first release of these numbers, so more market moving typically than the follow-up revisions. And we've also, let me just start with the Swissy today. Let me just get rid of my lovely mug and bring that up. Hang on a minute. There we are. There we go. Why is it not working properly? There we go. As I say, so this is the Swiss franc. We rallied this morning here. This is yesterday's movement, and this is the day before movement ahead of the Swiss National Bank. No change, no surprise from the Swiss National Bank. They continue to talk why they support, why they intervene the Swissy. But we've been moving down here. This is against the dollar here. The big blue line here is at .93 level, which we've been down to test on Monday. Tuesday, we'd rallied to 93.75, only 75 pips, but it's quite a move for this particular pair. As you can see the ATR here, it's a 13 pip typical hourly move for the Swiss franc here. That's what this blue line is here, the ATR, the average true range, on this 1 hour chart. So Tuesday, we were down here to test .93, the big round number. We rallied 75 pips, then we retraced. So that's Tuesday's distance here. There's Wednesday's distance. So the low was getting lower. The highs were lower yesterday. So we only got to 93.57 yesterday. And then we went under 93 itself just before close. Yes, so this white candle here under the key 93 level. Rallied this morning ahead of the Swiss National Bank announcement. Then we went, as the announcement came out, we pitched to 93.43 below the key 93.50. We've rolled over since then, and we're back under the 20-hour moving average, and we're back under 93.10. And again, in this last hour, we've tested the key 93 level, so we're back to test 93. And it's generally a stronger dollar here against the Swiss franc following the Swiss National Bank earlier on today. Over now, we had lots of bullish talk or hawkish talk, I should say, from Fed members. All of them across the board, really. Bullard, as you'd expect, talking about inflation being higher, and it's going to stay higher for longer than he anticipated. Mester, another key hawk on the Fed, talking about 50 basis points likely to be the next move in May when they next meet. That's what she's talking about. And even Daly, she was talking about everything is on the table, and 50 basis points may be necessary in May. So that's lifted the dollar. Good afternoon, everyone. I hope you're well. We've had obviously had some more dates since. I'll come on to that in a minute. Please tell me about the yen and gold. So let's have a look at yen for our friend Subhamani from India. Where's my chart? Where's my yen chart? So dollar yen remains very, very well bid. This is a weak yen story. That was cemented by some comments this morning from a key member of the Bank of Japan's monetary policy committee, talking about tightening is not going to happen, basically, is what he said. That's quite a very distinct statement for a central banker, especially a Japanese central banker. And that overall, a weak yen is beneficial for the Japanese economy. And as a big exporter, that's fair comment. But there's weak, and then there's 6-7 year weakness, which is what we're seeing here. This is the dollar yen. Just to pick a chart, and it's going down basically. Sorry, the dollar yen's going up, but the weakness is explicit from the weakness of the yen. The other thing that's adding to this is the huge differential between treasuries, massive differential in treasury yields between the US and Japan. And obviously inflation is virtually negligible in Japan, still at far less than half of 1%, where we're rocketing to well over 7% in the United States at 40-year highs. So this idea that this is going to turn around anytime soon is not it's not supported by neither the fundamentals or technicals. So here on the 1 hour chart this week, for instance, this goes back to Monday when we were down here at 119, and here we are 220 pips higher at 121.80, touching 120. We're having a go at 122. Next key line in the sand is up there at 122. There we are. Well, that's a blue line there, 122. So this remains bid above its 20-hour moving average, and then pick a chart basically on the daily time frame. Subharmony. I don't know what time frame you're trading this, Subharmony, but if we got to the daily, you can see what a very, very strong March we've had. Massive breakout here at 116 from our February highs, our January highs. Huge breakout. So consolidation dipped as low as 113.80 in towards the end of January, and we've just rallied since then, sideways into the end of February, and a massive breakout here. Breaking over the 20-day moving average initially here on the 2nd of March. We dipped down 2 days later, but we didn't go any lower, and now we've broken out higher again here a couple of days later. You can see that on this bit clustered chart because this is a 1 hour chart on the daily. You can see there that blue line there on the 8th, breaking higher than we've been. For zoom in, see how we've broken higher than that initial break of the 20-day moving average. Still very much channel bound really at this point. But the big break, or the initial break of 116 was here 2 days later. And then, it's a trend following trader's dream. It's just ran and ran and ran. So you're trailing your stop loss up, stalled a bit as we got to 119. Big break earlier this week over 120, 121. And here we are testing 122. So dollar yen remains very much bid on the daily time frame. The 1 hour we've just seen. And we got to the weekly time frame. Very, very, very strong 3 weeks for March. So a big, strong move. There may be some profit taking next week to back some profits. Remember, end of March is a key time for Japanese trade. It's the end of their financial year. It's obviously the end of the first quarter as well for everybody else. So dollar yen remains very much bid and to the upside. Today, intraday here on the 1 hour time frame, 121.88 within a smidge. 12 pips, in fact, of 122. So that remains bid to the upside, Subharmony. As far as gold's concerned, gold's a bit of a smidge. It's not really doing very much bid from this test down to the 119.25 level. This actual blue line here is 119.22. This is the 1 hour time frame on the spot market. But you see how we pivot through that area here. Yesterday and on Tuesday we got as low. Our low was Tuesday this week, which took us down to 119.10.70. But here on the 1 hour time frame, gold's broken out a wee bit. You can see how we've broken yesterday and Tuesday's high. Sorry, I'm talking about Tuesday's and Monday's high yesterday, and we've come back to test it today, 119.37. And we've rallied off that this morning, and we've broken the key 1950 level. So we've had a couple of volatile hours. Big candle up, retrace over 50% of the candle rose in that hour here. This hour here, the 1300 to 1400 candle. Quite a significant retrace in the last hour, but we've also retaken that back up. So. Having broken this support here at 1930, or the resistance here from earlier in the week at 1937, come back to test it today. We're back over the key psychological 1950 and rising as well. Lily, you're asking about you're asking about gold as well. But certainly that's where we are with the gold market today. So over the psychological 1950 and quite significantly over that amount. We're at 19. 56. So that looking relatively strong intraday. The 4-hour time frame broke its 50-hour. Bit again. See, there's this bit of a sideways action we've had this week here on the 4 hours. So we've been up to this 1937 and down to this 1922 range we've been talking about. That was into last week as well. We were moving around that, but we seem to have broken out of that on the break here of that 50-hour. This is the blue line here, is the 50-hour moving average following the first break here of the 21 moving average. See here on the 4-hour how the signal line on the MACD is starting to rising up. The histogram's getting smaller, and then it flipped. And in this current 4-hour candle, which is still to close, it started at 1 o'clock, so it's not going to close until 1700 hours. So we've still got a way to go. But you can see it's a very strong 4-hour candle currently. We can't make a decision on anything yet, but as you can see, it's a big, hefty candle currently, and we're way over our 20 period moving average. That 1937 level, and also that 50 period moving average moving down, and the 20 period has crossed through it here in the last candle. So the 4-hour remains well bid as well. You see there's a lot of fresh air or black space here as we've come down last week on the 4-hour candles. We may also, having consolidated around here, we may sort of start to now recover, and if we hold this 1950 level, obviously the next round psychological number takes us to 1975, and then obviously the big $2,000 a troy ounce level up here, still quite a way away, but 1950 is a level to watch for as we go forward for gold bulls. But that's looking relatively bullish on the 1-hour and the 4-hour time frame. On the daily time frame, very much consolidated. There we go, very much consolidated this week, as I've sort of suggested, around those levels we just talked about. On an end of day basis, that 1922 was key. So 1, 2, 3, 4, 5, 6, 7 days, so going sideways. We're up today at the top end of the channel, out of that 1937 level and over 1950. So if we close over 1950 today, that will be a positive close for the day, and obviously tomorrow's close of the week as well. So we closed over the 20-day moving average yesterday. It's not that significant simply because we'll be going sideways. There's no direction in the moving averages. But if we zoom in, I don't know, zoom in a bit more. I don't think I can, no. But as you can see, this might be the turning point today. It's too early to tell, but that was a positive day yesterday. Positive day today. Might see a positive end to the week and perhaps a test of that 1975. For gold, Lily, Subaru, I hope that's answered your questions. Again, guys, if you want a more specific detail on a particular time frame, put the time frame in as well, and we'll look at that. Otherwise, we'll default to the daily time frame. Lots of questions in here. Let me just check where we are. Everything seems okay. Says Andrea, very good. So pound, the guppy, big rally this baby's had. We went to one. Let me find the guppy. Yesterday, just ahead of where am I? What's it called? Isn't it always the case you can't find the key currency? Well, that's why it's a different. Should have checked this before I came live, shouldn't I? Right, where's my guppy gone? Let's put that down. It should be here. Where's it gone? I was looking at it just a minute ago. Where's it gone? There it is. So pound against the yen, the guppy. Yesterday we went to 161, new 6-year plus highs yesterday, over 160. We cooled quite significantly yesterday after the UK CPI data came out, much hotter than expected at 6.2%. 30-year high for UK CPI. We're at 40-year highs for US CPI. So inflation and possible stagflation as we move forward is the big mantra really for the rest of the year. So 160 for the guppy here, Saudi, in today. We've held it. Zoom up today. This is the 1 hour on the guppy here, the pound yen. Breaking here over 160 and the 20-hour moving average here early this morning, and it's moved forward since then from this decline yesterday after that rally and test of 161 ahead of the UK CPI. Then we retraced, consolidating into close, consolidating the Asian session, and then early European trades took us back over 160, up to 160.64. Now we retraced, but we're still bid. We're over the 20-hour moving average. We're at 160.65, and 161 firmly in sight moving forward. 4-hour time frame remains very well bid. Look at this big, strong rally this week. I'm not talking about this week. This takes all the way back to Friday, the 11th of March, here down at 153. So a huge, again, another trend follower's dream, adding to this position as it goes on. So rally, consolidation, rally, consolidation, rally, retrace around the consolidation there. Might have taken you out, some profit taking yesterday on that spike to 161 and then down to 159. But then we've moved back ahead this morning here over 160, and there we get to that 4-hour candle there, or within that 4-hour candle this morning from 7 o'clock, remains bid to the upside and 161 in sight. Remember, the pressure on the yen continues. Obviously, the comments from the I think it was, I can't remember his name, the guy within the Bank of Japan had his comments this morning. But basically, yeah, that remains bid as well to the upside here on that 1 hour, 4 hour, and daily time frame. If you want a different time frame study, let me know and see what you say. Arthur, hello, first time watching, welcome, my friend. Any questions you want to have a look? We'll get to yours, Arthur. There's quite a few ahead of you at the moment. So I'm going through as quickly as I can. I say big day today. I didn't get through to the. I said the PMIs were fairly sort of quite mixed, but quite good. The initial claims. Let me just go back to the calendar, guys. We'll come to the next. Excuse me, I haven't got any water with me today. What was I saying? Yeah, the PMIs were better than expected broadly. UK, Euro, German, French ones this morning, most of them in the red, except the manufacturing number for the UK. That's quite a significant miss at 55.5. Durable goods out the US. The main US data dump came an hour and a half ago, and durable goods missed quite significantly. The month-on-month numbers came in at negative 0.6 of 1%. We're expected to rise 0.5 of 1%, so that variance is over 1%. And there were 0.8 of 1% last time, so it's quite a significant drawdown in the core durable goods number. That's the most significant one. The headline, though, as well, the headline durable goods was a bigger miss. It was 1.6% growth last month. This month, it's coming negative 2.2%. It was expected to slip, but only to negative half of 1%. It's coming at 4 times that. 2.2%. So a big slide for durable goods. That's durable goods. Remember, are the things that are durable. So people buy and they hang on to things like computers and refrigerators and goods like that they don't buy very often, but they last, and they last more than 6 to 3 months is how we describe durable goods. So it's a significant investment typically, and it's something that hangs around for a while. So that's quite a significant tail off in the February number. Obviously, ahead of the conflict in Ukraine flaring up as well. Remember, a lot of this data is ahead of that invasion by the Russians into Ukraine, which is now into its second month, 4 weeks now, unfortunately. But I say the positive number out of the US was that initial claims back under 200,000, significant decline to 187,000. So it's a 26,000 or 27,000 drop in claims this week. So that's a really positive number. The ongoing numbers still looking quite good as well. The 4 week average as well. So that's back to pre-pandemic lows. In a typical economic cycle, it's around about 220, 230, 50, 60,000, that sort of number. So 187,000, that's very good, but it's also adding to this idea or the trend in the tightness of the US labour market, and obviously that's putting pressure on wages potentially, and therefore feeding through to higher overall inflation pressures in the United States as well. So it's good for people to get jobs, obviously, less people claiming, but are people falling out of the marketplace? This great resignation story that data sort of adds to that story as well. That people just aren't bothering to get back into the economic loop following the pandemic. So that continues to go on. Obviously, next Friday is our non-farm payroll data. So that's still a little over a week away now. So that'll be watched with great interest. Interestingly, Kashkari, one of the key centrists on the Fed, has just announced that he sees inflation. What's his phrase here? I've just seen it here. It's just come across in my newswires here. Kashkari sees inflation as too high, basically, and sees 7 rate hikes during 2022. So and 3 into 2023. So they're all, the whole of the Fed now very much biased on the hawkish side, are they playing catch up? Have they reacted too slowly? That's what many analysts are reporting. So anyway, where were we? Let's have a look. Sadi was talking about the guppy. Here we are, guppy's world bid. Next target 161 itself. Alan's asking about another another yen pair, which is the Swiss yen, and again another pair that are conflicting data today. I've got Swiss yen here. I don't have Swiss yen. Remember we had the Swiss. No, I've got CAD Swiss, not Swiss yen. Let me just open that file. Chart. Swiss yen. Bring that up. Okay. Let's use a white clean template I was using yesterday. This is a simple awesome oscillator indicator. There's no moving average on this one, but Swiss yen here, you see huge move for as we've seen for March against the yen. There we go. So 126.75 was that breakout level. Our high for February was this sort of level here through here at 125.65. We retraced strong floor here at the beginning of March, and our February low here is 124.50 level, and then that's just continued to rally. Another trend follower's dream. So big consecutive. So let's count the candles. So 1, 2, 3, 4, 5, 6, 7 consecutive positive candles for the Swiss yen, and broken out of this key initial February high here at 125.65 at the beginning of March. Then we broke above for new 2020 highs here. So the January high here was breached here on the 18th of March above this 126.75 level, and it's rallying. So let's have a look. What does the weekly chart tell us? Where are we going from here? Well, it's no surprise, 2 big strong weeks. Let's zoom in again. So you can see this is the weekly chart, remember guys, and it takes us back where we're trading at the moment at 131, or just shy of 131, takes us all the way back 6-7 years to the week of what's that? That's we were in the July of 2015, so it's a long time ago. 7-year high Swiss yen trades at the moment, and again the Swissies said this morning that they're happy to let it, or not happy, they've let it accrue. Certainly, this is a combination of a stronger demand for Swiss franc, but more importantly, in the last couple of weeks, this weakness of the yen. So how long this is going to go on for, we shall see. Never know, obviously, but as you can see, we're at 7-year highs here, 131. I say I've only got the awesome oscillator on. If I insert some of the, we put like an RSI on this, where are we? Let's put an RSI, see what that looks like. So default 14 set up for RSI. Our RSI is currently trading at 78.6 here on the weekly time. This is the weekly time frame, Alan. If we come down the time frames, which is probably more your trading time frame, the daily remains RSI at 80, very significantly into the overbought zone. But as you can see, things can remain overbought for a long time. But 80 is stretching it, one would argue. Zoom in a wee bit. Come down. The 4 hour again remains bid. There's no look. That's trending high. There's nothing really going on to suggest that's running out of steam at all from this this breakdown here. Just get rid of that. You can see. Let's do it from here. It's our 4 hour time frame. It's a fairly steady old break of that. Once we broke this 125.65 and continues to. There we go. That's your trend line and the 4 hour, and we come down to the 1 hour. That's our 4 hour trend line. As you can see, we've tested it a few times, but again, it just rallying. Obviously, 131 is the next level to look out for. Alan here intraday. Daily looks, say here, it looks a bit stretched, doesn't it? From the just simply at the RSI, but very strong AO. Awesome oscillator candle, and just look, we've got a big peak here as well. We have got higher than this. Remember, the awesome oscillator is an unbounded oscillator, so it can go as high or as low as it wants, but that's looking quite stretched as well. There may be, I say, come to the end of the week, there may be some profit taking going on there, as we've had what's that? That's 1, 2, 3, 4, 5, 6, 7 unbroken consecutive days higher for the Swiss yen. Some profit taken lightly as we get to 131 certainly, but that's trending higher. Looking a tad overstretched here. You may want to cool a bit, but it's if we go to the weekly as we did before, and then zoom in, you can see it's just been part of the movement up, but it has stroked higher at 131. If we look to the left, take us back to that 2015 level. What happened the last time we were up here? Well, we went higher, didn't we? Well, here we were coming down from there, but before that, the earlier part of in May 2015, we were still moving higher, and we went as high as 133.85. So that's our, that's the, again, ultimate target from 2015. Sorry, not ultimate target from 2015, initial target from 2015. Because if we slide. Sorry, let me just take that off. If we go backwards again, so this is our initial target here, 2015, which took us higher than that. We went to 136.75 in that week of the beginning of what's that? That's the beginning. Must be the beginning of 2015. Yeah, 2015. So it's a long time ago. 136.75, and then we even spiked here as the Swiss franc came out of that holding pattern against the euro here to 151. So we're in not uncharted territories. Say to our connection, somebody trying to restore the connection. It says, oh dear, that's not good. Why is that then? Is that my internet? Unprecedented highs. There we go. It's seen. I hope I'm back. So Alan, there we go. Unprecedented highs. So let me just keep going, unless somebody tells me otherwise that you can't hear me. Don't worry, guys. 52, 54. Yeah, I'm just getting to messages now. I'm getting 20 minutes ago, so just bear with me. I will get through them all. Right. Okay. Looks like it's still okay. Where was it? Right, Aussie yen. Let's have a look at the Aussie yen. Aussie yen I've definitely got here. It's the key risk sensitive of all the pairs, really, the Aussie and the yen. But again, it's all about yen weakness, just like we've just seen with the Swiss against the yen. Aussie is very much bid, yeah, it's a bit of a delay. But this is Oz Swiss, and again, this is on the 1 hour time frame. So what a very, very strong few weeks we've had from this consolidation down here at 85, and rallied. So here we are, 91.50 today at the moment. So the trend remains very much intact. The blue line here is the 50 period 1 hour moving average. See what strong purple line closer is that 21. We've been to test it here on Monday, but we've been above it ever since. In to test it again yesterday, but you know, it's just nothing goes in a straight line. But that's rallying strongly. Move up and remains bid to the upside. So how does it look on the daily time frame? Look at that, very, very strong rally. RSI here at 86, way into the overbought area here, 86 on the RSI. But the trend remains strong. So, you know, don't panic. You know, if you're a trend following trader here, you understand why you may have panicked. But this particular strategy, for instance, you know, different ways of trailing your stop loss when you have a strong trend like this. It can either have I mean, some would have their stop loss around about here at 88.27, you know, counted 3 candles back. Some might have it just 2 candles back. Some might have already moved it up to this big move we had here on Tuesday at 90, stick it around just under 90. Others will be using this midline of the moving averages that we're using, this 9 period here, which have it at 88.66. Whatever it is, you know, the trend is set and the trend is strong. Don't fight the trend, my friends. As I say many, many times. And again, another one that we can see a clear breakout from consolidation here through February. And we've been over, let me zoom this in for you. We can see this key purple line here is the key one for me. It's the 20 on the midline of a Bollinger Band if you're using a Bollinger Band to trade this. You can see we've been above it, you know, going all the way back here. We haven't closed under it until here, right at the beginning of February. So it's been bullish. We haven't really broken out though. It was a sideways action for most of February, and we came here towards the end of February. 2 strongish candles towards the end of the month, both up to the upside. Breaking out of this level here, breaking us above 83, and here we are all the way at 91.50. Hundreds of pips on offer in this rally, and it's continuing and it's holding. But you know, caveat is that the RSI is high and getting higher. We're at 84.76 here. You can see it just above my head. But you know, people say, well, it's overbought. But you know, as I say, this line here takes us into the overbought zone. And that's been from the 16th of March, and here we are, the 24th of March, and it's rallied even more, hasn't it? So don't get too uptight just because the rules say RSI is overbought. You know, that's moving high. MACD is still positive. The signal line is up. The histograms here are significantly above the signal line now, so maybe getting a bit stretched. But at the moment, that trend is running. Keep your stop loss trailing and just keep backing the pips as that moves higher. I don't know what time frame you're trading this on, my friend, but the 4 hour will be just the same. There it is, 4 hour strong and trending, and the 1 hour today, strong day Tuesday, a strong day yesterday, and another positive day today. 91.37, trending higher, a bit of a loop down, dip down from the MACD as it moved, signal lines moved down, but starting to turn up now, but all the way supported by that 20 hour moving average here on the 1 hour time frame. And on the 1 hour time frame, the RSI is also now moving into an overbought area, but you know, as it was here on Tuesday, it was overbought most of Tuesday, but it continued to accrue. So the trend is overriding any of the daily, the intraday oscillators, and we're moving higher. Where do we go from here? Well, again, let's have a look at the weekly time frame. Unprecedented areas the last 2 weeks, breaking out of this 85. So again, like we did with the Swiss yen, here for the Aussie yen, more important Aussie yen. This is the weekly. You can see it's way off the chart here. This is taking us back to 2018. Let's zoom in again. Where we are now, 91.40. We look to the left, look to the left, look to the left, and here we are all the way back again to May 2015. And this was a period of movement down during 2015. So a bit of a loopy one, but you can see where we are now. See how it was in 2015. It was a key sort of support area, this 91 area. It's actually 91, these candles here. There we are, that blue candle there. See, it's 90, well, 90.50, it was 90.50, so 100 pips below where we were. It was a key support here on it. Remember, this is a weekly time frame in 2015 coming down. So we tested it once, bounced off it, tested it the second time, bounced off it, went higher this time, but couldn't break over our 50 moving average. Tested it a third time and then broke through it. So this may provide a similar sort of resistance as we're going up at the moment, but 90.50 is key here. But again, all the way back 7 years to 2015. So yen in very, very weak mode at the moment, and no sign of that changing with regard to the policies from the Bank of Japan or any movement on their yields either. So Aussie yen here remains very bid, my friends. So hopefully you can all hear me again. What about euro NOK? That's a very good one, Sikagi. Not one I actually trade or look at, to be honest. But the Norwegian bank earlier today moved interest rates. Well, not yet. It was yesterday, wasn't it? Moved interest rates. But let's have a look. Happy to look at something I don't normally look at. Because a chart is simply a chart. What I'm looking for a new chart. I'm looking for a forex pair, and I'm looking for euro NOK, which is down all the way down here. Let me find it. I can't immediately. There it is. There it is. So let me just stick it on. So let's do the same template we've been looking at, which is this crossing. I should do a different one. Crossing EMA strategy. Time frames, Solanke. Let's have an overall look. So this remains here. The daily time frame. This remains in a downtrend. Clearly, there we go. Here from the middle of February, you've got your lower low in play. Bit of a widening wedge now, but gapped on open today after yesterday's Norwegian Bank announcement. So where are we? Well, we've gone from 10.25 up here, or 10.20. Let's say 10.20. Make it a round number. 10.20 here at in February and January were our 2022 highs thus far, and then we've just weakened ever since. So on the daily time frame, so moved down from 10.20. Here we are at 9.50. Let me just put that on as the next line down. So 9.56, so around about where we are now. So 9.50 is just about there, isn't it? 9.50. The gap today, this morning, because of the weakness in the pair, classic little trend down. So again, this broke lower initially here as a trend follower using this strategy under the 21 there on the 23rd of February, moved down, retraced up. So we might have closed out our short from here this day, looking to go long. It didn't happen. The 20-day remained resistance, even though we went back over the night, so it might have closed our short out. But then it could have either entered again that day or waited the following day till it went back under the 9 and the 5 as well. But certainly the 20 was hanging as resistance, but classic sort of move down. So we moved down, retraced, and then down again. And then the key thing was that gap this morning. 9.50 is now key. and we made our intraday low so far today is put us down to 9.4491 is our low for this pair. So how does that look on the higher time frames? On the weekly time frame, we're at again, if we zoom in, you can see we're at multi-year lows, takes us all the way back to 2018 lows here, Sikanki. So again, it's looping lower, has been all year basically. So Norwegian crown, euro moving lower and at new week lows. So the trend is still fixed. RSI this time into the oversold area, but it's only slightly at 27 here on the daily time frame. Plenty of movement. This is the ATR, so we've got a point about a 0.11 move on a daily range now for this pair. So it's trend very much set. Obviously, resistance now is that close of yesterday. So at 9:55. We need to get back to there, and the 20-day moving average all the way back up there, top of our channel at 977. So trend remains set and running down. Obviously, watch it next week. Watch all of these next week. All these things we talked about over the next few days, few weeks, because we're coming obviously to the end of the month next week, and also the end of the more importantly, the end of the quarter. So I hope that's answered your questions, Sikanki, on the Euro Norwegian crown. Who's next? Paul, hi. Paul, Arthur, hello, my friend. First time, I hope you're getting something out of this. I'll come to your questions in a minute. Do the 5. I'm not sure what you mean, do the 5. I presume you're talking to somebody else. Think Science, hello. Great handle, TS, like that. Arthur, so you're asking for us to have a look at the US 30 and the NASDAQ in the 4-hour time frame. There's somebody on Facebook asking about something. Euro Oz. Ishan, I will come to Euro Oz in a minute. Don't worry about that. Okay, there's plenty of stuff to get through as well. Lots of people asking. So thank you for your patience, Arthur, and welcome. And hope this is useful for you. Feedback is great. Tell me if it's useless. It's of no use at all, and we'll stop doing it, or we'll do something different. But we're here to help, guys. So anyway, Arthur, you're asking about the Dow. So here, this is the Dow. Let me take it to the daily time frame. Here's the Dow. Obviously, we've been in this big sell-off from the beginning of the year, all the way down here to 32.90. A key dotted line I've got here on the daily time frame. And intraday, we went as low as 32,200 towards the end of February. Been back to test it again here in the middle of January, middle of February, but a nice floor. There's a reason I put this in here at 32,900. It's a floor below the key 33,000 level, and we held it for a number of days, 4 or 5 days here, and then we've broken out, or then it appears to have broken out. So the first big move here was here on the 16th of March, when we moved back over the 20-day moving average. All the key US indices had a very strong day that day. I will come to the US 500 in a minute, but as you can see here, we've had 1, 2, 3, 4. See the white candles here? 1, 2, 3, 4 consecutive white candles. And most of those days, they were over a 1% move, which is unheard of, not unheard of, but very unusual, and tends to be a bullish sign. So we rallied quite significantly, and then we ran into this 35,000 level. We couldn't get to it. We topped out here on my blue line here. Let's zoom up here. Let's bring it right up to date. We topped out here this week at 34,800. We couldn't really get over that. So 1, 2, 3, 4 days. So Friday, 3 days this week, we banged into it, and then we were down yesterday, over a 1.5% decline yesterday, even though we had this strong rally up last week and earlier in this week. And we're positive again today. So going forward, we now have support coming up on the 20-day moving average, which now sits where the 21-hour moving average here is on the middle of the Bollinger Band, if you're using Bollinger Bands, around about the 34,000 level. So the big round 34,000 level now is key support. Key resistance is 1,000 points higher at 35,000. We need to get over that, but first, on an end of day basis, we need to get within a smidge of that. So breaking over 34,800 and then 35,000 itself if we're going to move higher. So that's our next support down here. That's that 34,000 level. The blue line here, I don't know if you can see this dark blue line here. This is the 50-day moving average, and that's where we're sitting at the moment. Last 5 days, we've been sitting and pivoting through the 50-day moving average. So that sits currently a tad higher. What's that? That's running at, I can't actually see that level. Let me just go. Data window. So here, the 50, there we go. You can see over here, the 50 MA here today sits around that 34,400 level. So 34,000 is the big support of the 21-day moving average. The 50-day moving average sits at 34,400. Our end of day resistance sits at 34,800, and then the big psychological 35,000, and then a break for these back to these February all-time highs. Maybe we'll see if we go up. Okay, so that's Nasdaq on the daily time frame. So let's come down a time frame, which is what you're asking about, the 4 hours. So the daily's been bouncing or restricted. So the 4 hour will be just this extended sideways action on that we've seen there on the daily time frame. So there's levels I've been talking about on the daily time frame. So there's our 34,400, which has provided support thus far this week. Arthur, here you can see this blue dotted line. There's 34,400, and there's our resistance at 34,800 level, which we can't get over. So at the moment, it's very much a sideways action. There's no direction, but certainly that's a positive. For 4 hour traders, we now have, this is the 200 hour or the 200 period moving average, and the blue line is the 50 period moving average, and they crossed earlier this week here. So that's a positive sign on the 4 hour. You see how it's lagging because of this big rally up, and now we've come back down since then. But it's the nature of the indicator. But it's still positive. We hold 34,400. That's good. You might want to trade this. At the moment, it's just been sideways. You want it to break higher. We may have another rally to 34,800. However, the MACD signal line has rallied up here to last week, and this week it's really been sort of flattening out. So you see it's moving down. So this is relatively negative. Okay, so here on the 4 hour we've moved down. Can't see that very well. Moved down, and you can see the signal line on the MACD is also moving down. So that's relatively negative, and it's getting weaker as well, as what they're saying, running out of direction because the histogram line, see how they're short now, got a significant gap between the signal line and histogram line, so there's lots of fresh air there. So we're running out of direction, we're running out of momentum, so we seem to be consolidating here. So again, that makes the 34,400 level even more key. And here below that, next level below that would be this 50 period at 34,150 for 4 hour traders. Okay, so they're your two support levels. To breach higher, we want to break and hold over this 20 period moving average, which sits at 34,500, and then we want to test 34,800. Okay, Nasdaq will be quite similar, but Nasdaq's had a bigger bounce back than the USA 500. So the USA 100. I won't go through the daily thing, but let's just do the 4 hours, which is what you've asked for. So here, earlier in the week, we were down, it's 4 hour. So earlier in the month, we were down here at this 13,000 level, which we tested at the end of February as well. But since then, it's rallied and rallied significantly. Here, again, using this strategy here on the 4 hour, you would remain long from the initial break, well, the initial break was all the way back here on the 15th of March, around about 2000 hours. So the 4 o'clock to 8 o'clock candle on the 15th of March, beware the Ides of March, and here we are, 24th of March, and we're still long. So broke the 20 period here, went long, over the 50, let's zoom this up, it's a nicer trending story here. A couple of candles later, we broke the 50 period moving average here. Remained positive through the key psychological 14,000 level. See how we ran to it and then finally broke it. Next level was the break of the 200 hour moving average. So that's also positive here on the 18th. We've rallied. That was Friday. We rallied this week as well. We've so far topped out at 14,700 up here. That's our resistance here, 14,700. We can't get over that, can we? So we're just, so 1, 2, 3, 4, 5, 6, 7 candles. Certainly ran out of steam at that, but we've come down, and our support now is nicely set up. So we've got support at the 20 period moving average at 14,430. We've now got a positive setup happening here. We've got the 50 period moving average and the 200 period average above the psychological 14,000 level, and we've got the 50 period and the 200 period about to cross by the looks of things there. So that's a very positive setup into the end of the week. And again, remember, maybe some profit taking going on as we get into the end of the month, but that remains positive, although range bound now here, Arthur, on the 4-hour time frame. So 14,430 is your support, and 14,700 is your resistance. This is the chart. This is the channel a 4-hour chart is in, but still biased to the upside. Here on this other indicators, the MACD again is quite negative, so that's moving down. So again, running out of steam potentially here. You can see that's down. Here we've got the stochastic. So the stochastic crossed up here on this particular chart. So we've got a cross on the stochastic up there. They've both come out of the overbought zone and have moved down quite. We see how the stochastic has moved down quite aggressively, but the price action hasn't really followed through. So that's looking to perhaps turn around if we hold this support here for the Nasdaq. So Nasdaq 100 or USA 100 doing quite well. Patanti is our next question, and same sort of story. Okay, Arthur, what is the best strategy to use in Forex? There isn't a best strategy, my friend. Lots of people ask me that. There are thousands. There are hundreds. Well, certainly there are hundreds. There probably are thousands of strategies. The strategy that works best for you, Arthur, is the one that works best for you. I know that might sound really flippant and a bit arsey, excuse my language, but that's the issue, my friend. It's not the strategy; it's your ability to apply the strategy. Let me just get my foot. I'm going to go and get my soapbox here. Arthur, it's not the strategy, because there's lots and lots of strategies. That one we've just been looking at is a crossing moving average strategy. There's lots of other, actually, let me just, there's lots of templates, there's lots of strategy. If you look at my profiles here, look, these are all different setups for the same chart. So let's just click on one. This is, this is Heiken Ashi in the ATR setup. Different, same charts, just different candle setups. So it's not the strategy, and they all work. They all work to a level of degree. It's how you apply the strategy. So here, what were you were asking about? I don't know about the USA 100. You were asking about the USA 100 and that other, or the USA 30. Here it is. No, let's start with this one. So, no, it's not there. 30. So let me just some kind of. So which one did we click on? It I can't remember now. It's this one, wasn't it? The Heiken Ashi candles with just a simple ATR. So Heiken Ashi candles here are still well. They've turned using this strategy. You see a strong. That's a strong rally here. And then this is red, so it's gone from positive to negative, and we got candles. So this is, you're out. Using this strategy, you'd be flat. You wouldn't have a position here. Watch the webinar on how to use this, these strategies. But basically, using this particular Heiken Ashi candle strategy, you're out because not a lot's happening. It had a nice strong run, very, very strong run, bit of indecision here. With Heiken Ashi candles, the lack of wick to either the top or the bottom is significant. So here, what you're looking for here, the blue candles are positive, the red candles are negative, and this is average price of the last two candles. This is how Heiken Ashi works. So these are positive. This is a positive trend. They might have got out there, although it's still candle's still positive. Big volatility in that particular hour. I don't know what, or that 4-hour candle, but it's remained positive. So again, some people just trade this just simply on the color change. Can get a bit choppy. But certainly you've had an awful lot of pips here as that's run up, another run up, out, positive, and then out because we got mixed messages going on. That was a short position, then out, long position, weak one there, and then out, and now we're out now. We're either short or long using that particular strategy. But sorry, my point, Arthur, is there's lots of them, and most of them work, and they work well enough. One of my favourite stories is, the survey that was done a few years ago. 18 million trades were surveyed by one particular broker, and most trades were successful. Looking a bit pudgy. Most trades won, but the problem was most traders lost money because they couldn't. It's all about management. It's all about risk management, money management. Most traders don't do it and don't do it well enough. It's very, very simple rules. People can't stick to simple rules. And so, for every dollar they won, traders, they were losing $2. So although they were winning more trades than they were losing, about 55, 56% of trades were winning trades, the 45% of trades they lost were losing twice as much as they were winning. So overall, they lost money. It doesn't take a lot to make a winning trader. You've just got to follow some simple rules and stick to them. And that's the issue. So it's not the strategy, Arthur. It's finding one that works for you. There's lots and lots of strategies that work and work well enough. So find a time frame that fits you. Find a strategy that sort of works for you well enough. Don't try and find something that's working so 80% of the time or 90% of the time. 70%, 60% is more than good enough. The problem is most people can't accept the 40% of trades they lose when they're trading, and that's the mindset thing. It's always about mindset. It's always about trading psychology, Martha. Watch our webinars on risk and money management because that's what this business is all about, my friend. I hope that answered your question. That was a bit flippant, but I hope it answered your question. Anyway, back to the charts. Let's have a look. And back to my profiles. Right, just excuse me a second. I'm just going to close the blind a second. So just bear with me a second. The sun's shining on the moon. There we go. There we go. It was bright earlier. We had a massive rainstorm just before I started, or as I was starting, and the sun's come out now. So there we go. Tunku, good afternoon, my friend. How are you? Hope you're safe. How are the kids at school? Hope they're doing well and being good. Finally back at school. Euro Swiss. Why you? Tunku, you know what I feel about Euro Swiss. Where is it? I don't know. I've got it here. Euro Swiss sideways action. Swissy obviously in play because of what's been going on today with the Swiss National Bank. I've got Euro Swiss here. Oh, let's find it somewhere. Euro Swiss. There's my Euro crosses. Where's Euro Swiss? Euro Swiss monthly. There we are. Euro Swiss monthly. So what's that telling us, Tunku, my friend? This is going back all the way to 2002. This is the monthly chart for Euro Swiss. So it's obviously there's our 2015 hiatus. So we're going down. 2 big months down so far. Look at this. This is 2021 into the year. This the blue line on here. This is our month. It's the 20 period moving average on a monthly chart. So it's been down for 1, 2, 3, 4, 5, 6 months. So we're going down. And interestingly, this might be why Tunku's asked for it today. I don't know if that's today. I think it might be. No, it was earlier. It was here. Let me just put that on there and go back to my monthly. So this was the beginning of the month. We went down to 0.9970, so under 1 for the first time in a long time. We got back down monthly chart. You can see that takes us all the way back to this hiatus we had in January 2015 when they removed the peg. We had this massive collapse in the Euro Swiss, and many brokers, in fact, went out of business. It was pegged at 120. And lots of people got their fingers burnt. We rallied back to about 120 here in 2018, but since then we've been moving to the downside. Euro and as the Swiss Bank said today, Swiss National Bank said today, they've been happy for the Swiss to accrue. And here you can see, let's go down the time frame. So here this is the monthly. So we've been under its monthly 20 period moving average since the middle of last year here, July 2021. We go back to the weekly and see again another trending lower move here. This is the weekly. That's that July week, and in fact here on the weekly it went under it earlier, didn't it? It went under, now it went back over it. So it was last when it first broke under there back into the end of May. Had a week when it went over. Had a week when it went over here. Quite a big rally here at the end of January, but since then, big move down. Some violent weeks down for Swiss francs. So the daily for Euro Swiss, we were down these new lows down here under 1 at the beginning of March. Let's put that on there. There we go. And let me put the. Oh, actually, that was just above 1, wasn't it? It's not saying it went under 1. Interesting. Oh, it was intraday. It's daily, so it was intraday, but we closed above the psychological 1. It's rallied, but we stalled here at 104 earlier in the week, and then we've been down again. And today we are back under our 20-day moving average. What else I've got? This is rate of change on here. I've got so this is measuring momentum. As you can see, the momentum is still. It doesn't matter how this is going, but that's measuring the momentum. You see, it's climbing, so it's gone up and then retraced at the top there. As you can see, the price topped out. So it's topped out here, gone down, topped out here. So it's still moving down. So a key level, interesting. It's interesting. Might be why Took was asked for this on that particular set. Let's do a different template on this. Let's go back to my EMA cross here. So again, with the MACD, it's now starting to push up, but we remain under the 0 line here. The signal line's moved up, so we ran to that. At 104 level earlier in the month, and we've been down this week. So we rejected that bit of a not tweezer top, but actually candles aren't the same. But so quite a significant rally and quite a bit. I've missed this completely. Quite a significant bit of volatility for the Euro, which is very unusual. It's one I sort of miss out. So February, huge February candle for Euro. So 102.25 at the moment, bias to the downside, and again a fair amount of fresh air to the downside. 4 hour, take some loading. That's been short from, was that last week or on Friday's close basically, or just ahead of Friday's close, as we went to 104 last week, Thursday, Friday, and that's been down out and then down again. Was that yesterday? Yeah, so that's got short yesterday morning, and we've been short. The Swiss National Bank did nothing to support that. So the 4 hour support is sort of around about there where that 20 hour is. That takes us to 1.0195, so 1.02. Tunku, my friend. And then, this big level here, back to the big psychological 1. Which we were down at the beginning of March. So back to be biasing to the downside. Intraday today, again, looping lower as we've seen all week. And it continues to move down. Bit of a pick up this morning as the data came out. And we turned around. The Swissy itself went against the dollar, went up and then turned around. So Swiss euros exactly the same, went to 102.68 this morning. Just ahead of the Jordan has talked that down again. So a weaker Swissy here this morning and continued today. So pretty flat. That looks like. Oops, connection problems. What's going on here? Intraday links. So we've got link there. 102.10 is our intraday low. That's answered your question, Tunku. Right. Where am I? Who's next? Fanzo. Pound Aussie. Let's have a pound Aussie. pound against the Aussie. So another one remains very much in a downtrend. This is the pound Aussie on the daily time frame. Our February highs, our January highs took us up here to 191.45. And again, another trend trader's a dream if you follow the rules. You can see again here what was going on. We were in a bit of a looping round. We moved up, couldn't get over 191.45. Here for most of February, we couldn't break under 188.45, so 300 pip range there from 191.45 to 188.45. But you know, the signs were there. We'd broken down to it, bounced off it sideways, yeah, and then here. Also, we don't know this as this is breaking down here, forming new lows for February on an end of day basis here on the 22nd of February. I have no idea what was about to happen, but the rules are the rules. So we were short, then we closed out the short, then we went short again, couldn't get over the 20-day moving average. The moving average is flat, not really telling us much direction, but the direction starts to break here on the 22nd. RSI starting to move down. We just ran, and it's ran and ran and ran. So you know, trailing your stop loss. Your stop loss would have been up here initially, pulled down to about here, pulled down to entry. As we've continued to wind, we moved into March. Thanks very much. Moving down. We went to new intraday lows down here at 177.31. We bounced off that a wee bit for a couple of days. Then we came to test it. We held it earlier in the week, and then yesterday, thank you very much, we're back through that intraday low, which is now an end of day low, and we've performed a new end of day low for March here. A whole month later, 23rd of March, and we're still going low here, the 24th of March. So again, another, as I've said this a number of times today, another trend following traders' dream with lots and lots of pips on offer. So from an initial break, again, let's here at 188.48, we're all the way down here at 175.61, hundreds of pips literally on offer there just by following some rules and staying short when the market tells you you can't short, or if you'd got out as it's retraced against you there a wee bit and then got back in here earlier this last week, or you just got out because you've had all of that run down, or certainly at least that run down. You never get all of a trend, but that would have been enough to get me back in certainly. And I was trading this now a big negative candle again. And then yesterday, that would have added yesterday's break of to create a new end of day low for March. Again, would have been enough to add some more shorts positions to that. MACD's flattening out, the signal line's flattened out, but look at today. It's not we can't make a decision again, but we've gone back a long histogram today. RSI 25, just into the overbought zone, but still in the overbought zone. So a bit of a caveat potentially, but you know, it's nice strong move down, retrace here, the RSI up back into the out of the overbought zone, but didn't last, did it? Yeah, well short of the 28-day moving average. Tweezer top formed there, here, and then the big down candle that day, and story continues. So down we go again. So Aussie pound Oz is definitely in the downside on an end of day basis. For this to stop going down, we need to, as far as this strategy is concerned, these two trade moving averages need to start turning up and cross, which they didn't, turned up here but didn't cross, and then break the 20-day. So resistance sits at 108.35 on an end of day basis. The trend is moving down. The weekly, what's that? That's 1, 2, 3, 4, 5, 6, 7, 8 consecutive weeks to the downside. That's a strong Australian dollar ahead of the war, during the war, and commodities have been bid very, very significantly. So where's the floor? Well, we're sort of at it. Well, we're getting towards it, aren't we? The floor here on a weekly basis takes us back to the beginning of 2021. So not as far back as some of the others. Next target is 174. What's that? 74.54. So it's not many pips in it here on a weekly basis, but it's certainly looking quite weak. And if we go up again to the month, all the way to the monthly chart, this 174 174.54 takes us all the way back. And indeed, on a monthly basis, we went lower than that in December 2020, which took us to 172. So downward pressure still for Aussie pound. Fanzo, I don't know what time frame you're trading it, but you can see that's the daily time frame. So if we go down from the daily to the 4 hour, 4 hour remains weak. That's a blue line from our hourly. And we go to the 1 hour. Again, some sort of consolidation here early in the week. Monday, Tuesday, sideways. Nice channel form now, just waiting for the break, either up or down. So top to bottom, top to bottom, top, failed top, see how the low was lower. And then we broke out here on whenever that was yesterday, out of our channel at 177.30. And thank you very much, all the way down there. That floor, as we mentioned earlier, yesterday, 175.90, so under 176. We rallied, looked like we were going up at this point, didn't we? Looked like we'd formed a nice base here. 1, 2, 3 positive candles here yesterday, 6 till 7, end of the Asian session. Europeans just waking up, testing it higher, rejected it quite significantly. The big European session opening here, 7 till 8, and then, you know, couldn't break over, and it's just, you know, biased to the downside with this candle here. Didn't retrace. Couldn't break the 20-hour, you know, another negative candle, and then we broke, and then we broke, and then we broke in the last hour from that low there. So a new low for the day in the last hour or so, and then we've legged lower again in this current hour. So trending with the higher time frame. So the downside, Fanzo, my friend, hope that's answered your question. I haven't got a drink here, and I'm really, my throat's going. So I'll, there's a few questions left. So let's just get to them all, and I'll get to you. Friends on Facebook in a minute. Let me just check Andrea's. Right, there's a couple on Facebook. Euro Oz, let me just make a note of that. Euro Oz says Isham. Euro Oz. Did we look at Euro Oz? I can't remember if we did. Right, Isham. And it's the only one on Facebook, says Andrea. I can't see my Facebook questions. So let's have a look. Quebecer, the DAX, the USA. It's here actually. There we go. The DAX here on the daily time frame. Another one that's it's just like we saw before when we were looking at the Nasdaq and the USA 30. Big, obviously, sell-off for 2022 thus far. 12,400 was our intraday low here at the beginning of March. Obviously, the DAX, like the euro, very much in front. You know, the front-facing index, if you like, for the war in Ukraine. Germany still obviously buying 40% of its oil and gas still from the Russians, so that may be coming to an end. Try to do this deal with Qatar early in the week, but you know, index under pressure here as the war unfurled. But again, just like we saw with the Nasdaq and the US and the Dow recovering over the last few days, so quite a significant recovery here. So again, this one, it's broken back over its 20-day moving average. That's the pink line. The green line here is the 50-day, I think, is it? Let's check what we've got on this one. That's the 3 for some reason. What have we got? All right, so it's 5 and 3. Okay. So it's different moving average on this one, but you get the gist. The purple line is the key one, the 21 moving average. So here on the 16th, it broke higher, but it hasn't been able to break out. What do I mean by that? Well, look, we've had a strong rally up. I hope you can see that. Quebecer, you can see that, let me just pull that down there. So 14,500 is our key resistance. So strong candle here from this low at 12,400. So a nice rally up, breaking over its 21 moving average here, but then can't break 14,500. That's the issue, okay? So we've 1, 2, 3, 4, 5, 6 days testing it. Couldn't do it, and now we're back down now at 14,245 on an intraday basis. So hang on a minute, I'm not on there. All right, there we are. So that's our support, and that's, let me zoom this up a bit for you, Quebecer. That's our support now, having broken through. So our initial support is here at the 20-day moving average here, 14,200, another big round number. But the other area I'd look at as well is that the opening of that day here on the 16th when we had our big breakout. So that's our two support levels. So 14,200 and 13,980. So that's what's that? 220 pip support area here. You know, break under this and it's going to go back down. Hold this area and we might have a chance of breaking 14,500. And then this line's on here for some reason at 15,150. That sort of sits around these levels here from January and February. As a next target level. So consolidating thus far. Obviously some clear direction from the war or German economic policy perhaps, but really a bit directionless at the moment, Quebec. I don't know what time frame you were looking at, but certainly that's the daily time frame in these two blue lines. So if we go down the time frame, trading time frame, you can see we've broken into it here. This is that end of day on the 16th, broken into it, and then we've just been bouncing. So look here, oscillators to go short at the top of the channel and long at the bottom of the channel. So you might want to be looking at lower time frames to sort of rally the channel to the upside. But at the moment, the 4 hour on this time frame is biased to the downside. So the 4 hour has been biased to the downside since this big down candle here yesterday at 4 o'clock. But it doesn't want to break under this 14,200 level at the moment, but we're still under that 20 hour. So we've been 1, 2, 3, 4, 5, 6, 7, 8, 9 candles now under our 21 moving average here, and we're under the 3 and the 5. Yeah, so this is the 3, the 9, and the 21 EMA on this particular chart. So that we can see the horizontal support, hopefully. And then lower down still, today's 1 hour time frames, you can see again into the close yesterday down to this 14,200. Looked like we were moving up, ran out of steam quite quickly, but didn't want to move down below 14,100. So to move higher for the rest of the day, remember the DAX is closing shortly, the cash market, obviously this futures market runs. You really want to break over this 14,330, which has been our end of hour high today. The intraday high, the spike higher on the probably the PMIs earlier this morning. Indeed, it was here. Took us to 14,390. So that's your targets to the upside. So 14,390, 14,330, and our support is 14,200, and we're currently trading biased to the downside at 14,258. Quebec, I hope that's answered your question. Now, let me have a look at Euro Oz for Kuani over on Facebook. So let me have a look at Euro. What did we look? Did we look at Euro? I think I might have looked at Euro Oz, didn't I? Or was it Euro Swiss? Let me have a look at Euro. Is it on here? I don't know. This is the monthly. So again, that's the monthly trend is to the downside, has been for quite a while now, hasn't it? This is all the way back at the beginning of 2020, the pandemic. So it's been, biased to the downside and a huge breakout month this month. So support was there at 153.55 on a monthly basis. So the weekly basis, you can see that's our break here last week, or beginning of huge sellout breakout here at 153.55. Our low is here, isn't it? This is weekly, remember guys, I'm sure you're not trading this level, my friend. So 145.55 is our low a couple of weeks ago. But that was the big break here at 155.53. So let's go for the weekly. The daily will be weak. There we go. What can I say? Another trend following traders' delight. First first went short here on the 14th of February. Hasn't looked back since. Another one like we've just described. So a big down move, retrace, couldn't get over the 20-day moving average. You know, it closed out some of your shorts as this has gone back up here, there. If you got out there strictly, but then you could have entered again there, and certainly there would have been an entry. And then a few days later on Tuesday, we've gone below the previous end of day low here on Tuesday from the beginning of March. So again, another one that's punched a new March low on an end of day basis. And there we are. Next test is that intraday spike, which seemed really a big spike down, didn't it, at the beginning of March? But here we are back to test it now. We currently trade at 146.15, and that target sits there at 145.55. So another one biased to the downside. 4 hour will be similarly as nice. Well, 4 hours even nicer, isn't it? It's just you know, nice and clean. That one went short up here and hasn't looked back at all, really. So short, you could have got out here, then back out here. So that was the, again, 16th of March, 12 o'clock. Thank you very much. Having had a nice rally up for a few candles there. Nice rally up there, retrace, rally, yeah, another one trending lower. MACD is very much on your favour. Signal line trailing nicely down, and 1 hour will be just nice, really. One would assume might be a bit of a bounce in the 1 hour, but there hasn't really been, has there? So we're continuing to track lower. And again, the 20 period moving average kept you the right side of this short position all week, basically. If you, there's the beginning of the week, there's last week, bit of a move up, didn't work out. Move down, certainly the move down's worked out, wasn't it? Thank you very much. Lots of pips on offer for the Euro Aussie. That was Ishan over on Facebook. Ishan, I hope that's answered your question. Cooper, good afternoon. Yours turned up right at the end, Cooper, my friend. I hope you're well. Hello, everyone. Silver and Euro Yen, weekly and 1 hour time frame, please. And thank you. You're such a pleasant guy to do business with, Cooper, my friend. So silver, I haven't looked at silver for a long time, my friend. Can I look at Euro Yen first, if you don't mind? So Euro Yen weekly and 1 hour. What do you think I'm going to say, Cooper? You know, we've got a very weak yen, and here is the weekly. So didn't we? Huge rally here. So going back to May 2021 highs this week at 134. So let's just put that in, big round number, 134 for Euro Yen. You know, we as the pandemic gripped everyone, the euro was under lots of pressure. Yen was bid as a safe haven. We were all the way down there at 114. So 114 to 134. That's 2,000 pips, my friends. That's a huge, massive move. Admittedly, that's going back from April 2020 to May 2021, but you know, 2,000 pips is an awful lot of pips. And here we are now. You know, Cooper's asked about the weekly chart. Look at that those three weekly charts. Looked like we were getting lower, didn't it? To be fair, looked like the yen was on a bit of a bid. We were going lower. The lows were getting lower through July and October 2021. Looked like we were ticking up, but lows were getting lower. We've got low here just a few weeks ago. Back down here. Let's put the change the colour of the trend line so you can see it a wee bit. There's our trend lines, our wedge, going back to the summer of 2021, as it was moving high. But what a 3 weeks we've had! So back to the top of the wedge, broken out, and here we are testing this 134 level, as we said. So certainly the last 3 weeks, Cooper, I'm sure you've been tracking this to the upside. So the weekly is very, very strong. Our third week, still obviously today and tomorrow to go before this week the candle completes. But the daily candle will be bullish as buggery. There we are, 125. There's that line in the bottom of our wedge on the daily candle here at the beginning of March, and it's just ran here. This is the 21 EMA or 21 period. That's again, that's, in trading, it's strong here from the 14th, and it's ran out of the wedge, our trend line, and back to this 134. So that remains very much bid on the daily time frame. So that's our daily trend line support, quite steep here on the daily time frame. 4 hour, there's our daily trend line going back to the 7th of March. And intraday, your 1 hour trend, there's our 4 hour trend line. So came back to it yesterday, but no way, Jose. And again, another one that remains bid. Today, we've been as low as our 20 period moving average here at 133. So 133 has been our support. And then we broke out, didn't we, yesterday's high, which was 133.80. Let's change that one. And we've breached that in the last hour. So 134 is, next level. And, that's moving quite nicely. Support, Cooper, on the 1 hour is our 20-hour moving average, which is at 133.45. 134 is, looks like it's going to get another hit to the upside, my friend. So that's looking quite positive as well. MACD, big shakeout yesterday, but we couldn't see how we haven't broken under the 0 line for the histogram. So the trend has been very much set, and it's running just like we saw on the other high time frame. So again, another one, don't bet against it. The weaker yen continues. It may turn around quite quickly, but it hasn't. The trend, you've had lots and lots of pips on offer here. Very, again, another trend following traders, ideal sort of setup here. RSI 71, rising, still not yet in the overbought zone, so there's still some legs, friend. Arthur, some good questions here, my friend. I'll come back to you in a minute when I just finished with Cooper. I hope you're still here. Actually, I can't tell who's actually still here. I can't actually tell from here. Nobody on Facebook. Let me just double check. No, nobody else on Facebook. So, what were we doing? We were doing this Euro Yen weekly in 1 hour. So that's the Euro Yen, and silver was your other request. I actually looked at silver, Cooper, for a while. Commodities, silver. A bit like the gold. Let me just go and clean this up actually, because it's. Let me take some of these lines off. It's just, the lines are relevant, but I'm just going to clean it up just for now. So. Silver, like all the commodities, has been bid because of the war, principally anticipation of the war here. Again, let's put the lines back in. So our January high was through here at 24.50 or 24.45. Big, strong start to February. Obviously, this is the 24th, a month ago now. As the war broke out, unfortunately, and we've spiked to intraday to 27 on the silver market, or 26.93, within a smidge of 27. And then we've been a bit like the gold market. We've been a bit not sure what's happening. We've retraced. We still held this breakout level here at 24.50 from our January high, our February high. So that's our support. We've been back to test it intraday. Our end of day support is a tad higher now, or actually a tad lower. It's lower than it was. So we shall see. So 24.70 is our end of day support. And currently we've got a strong day today. It's a bit directionless, really, to be honest, Cooper, on this daily basis. But you weren't interested in the daily basis, but you're on about the weekly and the 1 hour. So let's go up to the bear in mind, that's our daily support zone here. It's 24.75 and 24.45. Let's go up to our weekly support area, our weekly area, and see it's sort of, again, drifting. So that's our support. So that's our high here, this 26.94 from 2 weeks ago, after the worry of the war. So the weekly remains obviously a bid on a trend line basis here from this low Takes us back to the beginning of the year, basically. Lines are all the same colour now, aren't they? It's not great. Let me just change the make the trend line yellow. Or I don't know. Okay. Spring green. Oh, yeah. So that's our weekly trend line, the green line here. So again, it remains bid. Are we going to test back to 27? We shall see. So coming down, we said that's our daily range is this support here, 24.75, 24.50. But you're more interested in the intraday, the 1 hour time frame, Cooper, and we've had a strong day today. So this is our big fat support here, 24.75, which we were down to yesterday and Tuesday. And rallied since then, basically. Trend line holding quite steadily, quite nicely, a nice little sort of move up, really. That's a support line there. And again, another sort of breakout level. Yesterday's close was our highs this morning, bound. Now, a big, strong, that was suggesting something was up here at this afternoon, 1 o'clock, 2 o'clock. We then broke through Tuesday's high at 25.30 a couple of hours later, and that's rocketed bid. I'm assuming, Cooper, you're long this pair and the 1 hour time frame. You've had a nice move today, 25.80 at the moment, so over the psychological 25 level from earlier today, and moving up quite nicely. Big move as well, so hang on to your hats on that one potentially. Silver on the break. The 4 hour, interestingly, I know you're not looking at the 4 hour, Cooper, but 4 hour next resistance is around the 26 level, so 25.80 at the moment. 20 cents higher takes us to $26, which we were last at back on the 10th of March. So a nice rally in silver today for you there, Cooper. I hope you've got some of those pips that were on offer there on that breakout earlier. Do let me know how you're getting on with that, Cooper, because that's looking quite bid. Still here. So you're long this one, Cooper, from earlier. That's a nice breakout move from that 120, from breaking up the 125 level. From I don't know what's caused that. If you're a silver trader, you probably ought to tell me, but nice move there. Arthur, first time here. So what he's saying: hi sir, please do you offer mentorship programs? I'm very new to trading. I was doing well on demo, but when I turned to a live account, I lost $3,000 in 3 months. I don't understand. Let me just put my big face up there, Arthur. We don't offer mentorship programs, no, but there are lots of mentors out there. I don't know where you are in the world, Arthur. As I said to you earlier, what you need to do now is analyze what's gone wrong, okay? So on a demo account, the big difference between a demo account and a live account is in the description of the two types of accounts. A demo account is just that, okay? You're paper trading. You're not using real money. So therefore, your subconscious, your psychology is much more relaxed because you've got this ridiculously large account. You might have, $100,000, $500,000 account. I bet you didn't have a $3,000 account on your demo account, did you, Arthur? Okay. So some of the mistakes you make in the demo account can be brushed aside because they're not as clear. They don't hurt you because it's not real money. But you should try and trade with a demo account. Obviously, to get used to using the platform, to get used to trading, placing a stop loss, seeing how swaps happen, see how slippages happen, all that sort of stuff. But the issue with a real account is that it's real money, and that's the main thing. It's a psychological thing more than anything. Lots of people do it. I've done it. Most traders I know that are successful now have lost money with live accounts, haven't been successful with demo accounts. It's very, very typical. Okay. So hopefully you've got a trading journal, something to, write down what's going on during the day, what trades you're taking, why you take the trades. Hopefully, Arthur, you have a plan. Hopefully, I always say don't use hopefully with bad trade, but you should have a plan. You should have a trading journal. You should have what you're trading, what asset you're trading, what time frame you're trading. That should all fit into your personal psychology. You should look at, hopefully you've had a look at, the trading, the psychology of trading. You understand spreads and leverage and margin and all those other good basics. Don't try and turn it around. Try and view it as a positive. Try and view that 3,000 you've lost as like an investment in your education. You could soon spend a lot of, $3,000 on any sort of education program. Obviously, you didn't want to do that, and it's a loss. But just try and turn it around. Try and think of it in more of a positive outlook on it. Okay. If you want me to have a look at your account, send me your details. I'm happy to have a look at that. Send me at webinars@hotforex.com if you want to contact me. It's probably it is the quickest way to get hold of me. Webinars, WEBINARS, webinars@hotforex.com. And that goes for anybody out there. If you want me to have a look at your account, let me know. I'm happy to do that as long as you're happy for me to look at your account. But $3,000 in 4 months. It's not. It is a lot. Yeah, don't let me belittle that. But it's divided by the month. It's not it's not that amount, but it is it's a lot amount you've lost. So let's learn from it. Let's analyze what's gone wrong. Are you using a lot size that's too big for your account? Are you trading something that doesn't fit with your personality? Are you trying to scalp when you should perhaps be looking at longer term trades? Are you trying to do longer term trades, waiting for lots and lots of pips, and you haven't got the patience and discipline to hang on to that? It's all that sort of thing. So Arthur, I'm here to help, my friend. Please do email me, and I'm happy to give you a hand, my friend. There's another question here from you. I was using supply and demand zones. Don't know, but I'm confused. Okay, well, supply and demand, yeah, that's fair. But like everything, Arthur, and that goes for anybody out there, obviously. Trading is an art. It's a bit of a science. These things you see on these charts, these indicators, they all have their pros and cons. There isn't a perfect strategy. There isn't a perfect time frame to trade. There isn't a perfect asset to trade. That isn't what trading is about. It's like life. Life isn't like that, is it? But most of these approaches are good enough. It's your application of these approaches. As I said at the beginning, there are thousands, hundreds, if not thousands, of strategies and approaches to trading. Whether you're trading intraday, end of day, end of week, you're a long-term trader, you're a swing trader, you're a scalper. Lots and lots of ways to both make money and obviously lose money. So you've got to find a way that works for you, that fits your personality, fits your lifestyle, fits your budget. But most importantly, always, 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 when you lose a trade, make sure the losing trade is a very small amount of your account. So keep the simple numbers in your the forefront of your head, and understand that you will lose a lot of trades. And if you're losing a lot of money on those trades, that's when it will start eating away at you. Most people can't cope with losing, and that's why they give up on they blow their account and never come back. It's a mindset business. It's a psychological business, trading, and that's more than anything, more than listening to old guys like me blethering on, or watching charts and breakouts and trend following or mean reverting type patterns, moving averages, MACDs, whatever it is. It's very much a mindset business. So and whether it's supply and demand zones, they all break down eventually. They don't always work all the time. So Arthur, the point is when you do have a losing trade, you keep it small. You keep it at 1 or 2% of your account, and just say, well, that's it. I've lost. I'm out, and accept it. And most people can't do that. If you can do that, you've got a chance of moving forward. Okay, but certainly send me an email at webinars@hotforex.com, and I'm happy to have a look at your account and what's gone wrong. And watch all our webinars on trading mindset, on risk management, on money management. I think Andrew's got one next week on position size, how big a lot size you should be using, or relative to the size of your account, because most people use a lot size that's far too big for their account, and they risk too much, and they lose too much, and then they're always fighting themselves to try and get back. They end up over trading and all those other good things. So Arthur, let's try and make the best of your $3,000 loss. And let's see how we can move on, and see how you're interpreting this idea of supply and demand zones. as well, and what you're trading it on, what asset you're trading. Let's find out what's going on. Any more questions, guys? Because I've been here an hour and a half, and I haven't had a glass of water today. It's my fault. And my voice is going. No, sorry, I don't have all the things you mentioned. Right, Arthur. Let's get started then, okay? So write stuff down. Write how you feel at the moment. Write how you feel. Get a book or type it into your laptop or whatever it is about how you're feeling emotionally about having lost $3,000. If you can afford to lose $3,000, it's not great, but that's how it should be. Most people lose money they can't afford to lose, and so they can't pay the rent or they can't pay the food bills. That's ridiculous. Don't trade with money you can't afford to lose, because we all lose all the time. It's part of trading. It's part of the business, and all the best traders lose all the time. They just manage their losses, and when they get winning trades, they let them run and run. Like this, even this example here. These could have been losing trades, going short here. It didn't work out, but that's more than being made up for by this big breakout winning trade, hasn't it? Nice big down leg here. Anyway, Arthur, get those things together. So go back to our website. Look at our range of videos. Have you watched all our webinars? Have you watched our videos? Here's our website here. What's that? Oh, it's the wrong site, but that's our HFEU site. It's not our Hot Forex site. But have a look in here on our e-courses, our videos. The webinars are all here. This one, if you watch this video, it's old, 5 or 6 years old now. I did this a long time ago, but you need to understand these basics about leverage and margin, pip values, lot size, all that sort of good stuff. And follow the webinars, the videos on these courses. Okay, come to our webinars. Come on to, if you're a client of ours, I hope you are. Go to our past webinars and look at all the ones, different, awesome oscillators. A video I did yesterday, Fibonacci, the one that Andrea did on Tuesday. But where to put your stops. Elliot works a bit more complicated. Multi time frames, technical indicators, lots and lots of different strategies. It's not all about that. It's about understanding yourself. I'm trying to find the one. Where is it? There we go. Supply and demand trade. Have a look at that one again. See if something different. Otto's webinar on that. The one I was looking for is there you go. There's another one there. Trading plan. What's the trading plan one? Write stuff down. Why are you trading? Why do you want to trade? It's not just about making money. It's about you've got to think of this as a business. Swing trading. 2 really good webinars on swing trading. 2 really good webinars on market basics. So it's all there, Arthur, my friend. We're here to help. So as I say, if you want to send me a webinar, an email to webinars@hotforex.com. That's our European site here, hfeu.com. But send me an email here at webinars@hotforex.com, and we can have a chat. Okay, and that goes for anybody out there, my friends. We're here to help you. Hopefully you can still hear me. Anyway, hopefully you saw all that. So I'm going to go now. There's no more queries. Let me just check. There's nobody else on Facebook. No, there isn't. So take care, everyone. End of the week tomorrow, and obviously we got non-farm payroll next Friday, 1st of April. So end of the month, end of the quarter as well coming up. So lots going on next week as well. But lots of data today. I say positive PMIs. No change from the Swiss National Bank, but confirmation that they've let the Swiss franc accrue. And obviously this big meeting between Biden and his NATO allies supporting Ukraine, offering more ammunition. Unfortunately, so necessarily means more deaths, unfortunately, but ball very much in Putin's court about what he's going to do next. Will he back down? It doesn't look like it, does it? But even the most mad excuse that word, but mad or extreme dictator needs a way out, and negotiation always is the way out. So anyway, I'm going to go. Take care, everyone. Stay safe, and we'll see you all soon next time. All the best, everyone.